Good afternoon, everybody. Welcome to the Moving Markets Podcast. It is Monday, August the 4th, 2025. After 2.5 weeks gone, I'm back. I wasn't gone in terms of recording podcasts, but gone from my home and my home office. And I'm already miss my new little grandson that came 2.5 weeks ago. But I'm happy to be back home, be back in my office and my space. And you may or may not, by the time you're listening to this, there's a good chance that you already got the email today about the Signal newsletter. And I just, as I was taking care of things today, I had so many things on my plate, doing some catch up with some things around my home, with some other things outside the home. And honestly, I didn't want to try and force something. I have not had a chance to do the research and crunch the numbers on a Signal newsletter trade that I would like to. So I'm going to work on that tonight and tomorrow morning. And tomorrow, probably mid-morning, probably within an hour after the market opens. That'll be mid-morning for those of you out on the East Coast, still kind of early morning for those of you on the West Coast. I plan on sending out a newsletter with a trade that you could enter into during the day tomorrow, or something that I'm confident you could try to get into the following morning on Wednesday morning. So no newsletter, no trade today, but we'll get something out tomorrow for sure. Let's talk a little bit about what the markets did today. I've got it up here on the screen for you. Dow Jones up 585 points, S&P up 91, NASDAQ up 403. Not quite everything that it gave up at the end of last week, but an awful lot. It's not everything if you look at the combination of Thursday and Friday sell-off, but it bounced way back from where it was at the close of the day on Friday. There's your S&P chart. We'll take a quick peek also at the Dow and the NASDAQ chart. There's the Dow. You can, again, didn't get back everything that it lost last week. Last week was a really ugly week for the Dow. 6 days in a row, 5 days in a row of trading down on the Dow Jones Industrial Average. Gotta say technical crossover on all three indicators, because we crossed over on the RSI, crossed over on the 5 and 20-day moving average. But it's looking, if there's any follow-up to this rally tomorrow, and we don't know that there will be. I'm not prepared to think that there's automatically going to be a follow-up to this rally tomorrow. But any little bit of follow-up to this rally tomorrow, and this will look very much like a head fake, which we get from time to time. Not real often, but from time to time we get that. So there's where we're at with the Dow. The NASDAQ had a really great day today, from a percentage standpoint, almost 2% up. And again, if you count what it lost in combination on Thursday and Friday last week, this is a nice bounce back up, but not a full rebound of those 2 days. Difference being with the NASDAQ, no technical crossover on the 5 and 20-day moving average, no technical crossover on the RSI. Very, very close, but not quite there. And for a while now, the MACD has just been running almost dead flat on the NASDAQ. So the news driving things today, I think largely it's, and we're going to talk about this in a minute. You probably, as you're listening to this, you see this headline, breaking news. We're going to talk about that. We'll see what that's actually doing to the aftermarket stock price, because a boost in guidance does not always equal excitement and people buying more shares and pushing the price of the stock up farther. So we'll take a peek at that momentarily and see where we're at with Palantir. Just at a glance, I'm seeing that there's a fair amount of aftermarket movement to the upside right now. So we'll see if that holds as we go on today. I mean, the market's barely closed. I started this podcast within 4 minutes after the market's closing. So there's a lot of time to see things play out in aftermarket trading today and pre-market trading tomorrow. We'll see where it goes. But right now things looking good for Palantir. All right, so we'll get into that in a minute. But the news driving it, I think a lot of it is after that jobs data that came out Friday, even though the markets really had a difficult time and really sold off on Thursday and Friday. I think there's been a lot of commentary over the weekend and a lot of commentary this morning about how the Fed just about has to cut rates now. And so this is one of those bad news is good news kind of things. We've had a lot of that going back to, I think it really started when the Fed, in my opinion, got overly involved in the economy and kind of started stepping outside of their mandate, and started, dropping rates too aggressively. The Fed has been political, not just with Jerome Powell, but going back. I think Bernanke was a tiny bit. I think there's no question Janet Yellen was overtly political and just an absolute, arguably, I would still argue that she's maybe the worst Fed chair we've ever had in the history of this country in my time. Let me rephrase that. In my time, because I have very little memory of Volcker. I remember Alan Greenspan, and it's not like we've had a whole bunch of Fed chairs since then. But in my lifetime, Janet Yellen, hands down, the worst Fed chair. But Jay Powell's going to give her a run for her money. I mention all of that because after Powell, and the FOMC decided, the committee decided not to raise rates, not to cut rates in their meeting last week, the market's now pricing in 92% chance of a rate cut in September. And I believe there are odds for another rate cut in October and another rate cut in December. So, and I've heard people, as I've been out running some errands today and not been able to sit right here at the computer the entire day, I've been listening to CNBC and Fox Business News, and on both programs, there are people, analysts, who are talking about probably 3 rate cuts this year. And there's only 3 more meetings this year. So that would be, if it was a 25 basis point cut each time, 0.25%, that would still be a 0.75% cut. I've heard a couple of people speculate that the cut that we get in September, that this may be better, that this would represent right here a 25 basis point cut from the current rate. But I've heard a number of people speculating, a couple of people speculated, at least, I say a number of it, at least 2 different people I was listening to today speculated that maybe a 50 basis point cut in September, and then 2 additional 25 basis point cuts, respectively, at the end of October and in the middle of December. So we'll see. But that's really, more than anything, I believe, that's the biggest driver of today's market move. But the other driver of the market news is this settling in of where tariffs are going to be for most countries. I think a lot of the bigger negotiations have taken place. There's still going to be some tariff turmoil. Trump's got India in his crosshairs over a big purchase of Russian oil, and that only strengthens and emboldens Vladimir Putin, which I would agree is a bad thing. I don't think that's smart to give Vladimir Putin more money, and therefore literally and figuratively more ammo to keep a Ukraine war going that he needs to. Vladimir Putin needs to be punched so hard in the nose over it. But I just, I don't know if the world political community at large has the stomach for that. So I don't know that it's going to happen. But this is certainly a way to combat Russia and weaken their position against Ukraine, is if you cut off their flow of money. And their only real flow of money is the sale of their oil. So if you can get everyone except China dropping their purchase of oil from Russia, you can put Russia in a much weaker position and maybe have a chance of brokering a peace deal in Ukraine. So. That's market moving news for certain. It's not I'm not going to sit here and say that the market shouldn't be moving on that news, but largely, I think the broader picture is that there is this sort of settling in of, here's where we're going to be with tariffs on other countries. Now companies can start to project, they can start to forecast. They can start to say, here's where we need to move our supply chain so we're not subject to as much of this tariffs. The consumers can start saying, okay, here's the products that I might be willing to pay a little bit more for because of tariffs. Here's the products that I'm not willing to pay more for. And just all around, I think there's this kind of settling in now of what's going to happen longer term. So I think that's a good thing. There will still be some movement on tariff news. There's still going to be some shakeup. There's still going to be some different things happening, but that's kind of what was driving markets up today, in my opinion. Primarily, the idea that we're going to get rate cuts before the end of the year, at least the strong hope and the strong betting that we're going to get rate cuts, and then the settling down of the tariff turmoil. Maybe that's the best phrase I could use for it. All right, got to talk about Palantir. Let's see what is being talked about. Palantir tops $1 billion in revenue for the first time. It boosts its guidance. It looks like in aftermarket trading they are up about almost 4%. I don't know if you can see that. Let's click on that and we'll zoom in. So Palantir had a move up today of about 4%. Aftermarket hour, they're up another 4%. I got to tell you, earlier today on Discord, and I didn't have a chance to respond to it because I was out driving around in my car, but one of our members on Discord gave his thoughts on Palantir, that it's going to be hard for them to have a perfect earnings report, and therefore he was betting on them going down. I didn't see anything about that statement that I would have disagreed with, but this may be suggesting otherwise. Now, I want to caution everybody, every member of the Safe Option Strategies program, anybody who's not a member of Safe Option Strategies that may be listening to this. Aftermarket trading, pre-market trading is an indicator, but never a guarantee of what is going to happen the next time the markets are open and actually trading. Aftermarket trading is incredibly light in volume. It has this ability to influence what may not happen, or what may or may not happen the next day, but it's not a guarantee that it will influence what's going to happen the next day. So you got to be careful not to read too much into it. Now, does that mean this is not a good sign? Of course not. It's a great sign. It's an indicator. It's like if we're watching the three chart indicators that we focus on the most, the RSI, the 5 and 20-day moving average, the MACD. Those are the three charting indicators that we look at the most here at Safe Option Strategies. Not the only ones, but those are the ones we pay the closest attention to. It's like if two of those three cross over and you're just waiting for that third one to cross over and you get it, that's fantastic. That is not a guarantee that the stock is going to continue on a long-term bullish or a long-term bearish move, depending on which direction that crossover came. But it's a good sign. It's a good indicator. So we don't in any way discount what is going on right here. We don't look at this and say, well, this means nothing. It absolutely means something. It means that Palantir is impressing people so far with what's being reported. I'm guessing that right now they're in the middle of their conference call. And what gets talked about in this conference call is going to be very key. The fact that they upped their guidance and boosted their guidance, that is probably the biggest mover of things after market. And I'm very anxious to see what happens tomorrow. I don't want to be kicking myself for having gotten out of our Palantir spread trade, but we had a phenomenal profit. We can always get back into something on Palantir. Our Palantir collar trade, I think, is going to be absolutely out of this world. We're already very profitable in it. I thought I had this refreshing already, but it's not. We've got short calls at 170 that are clear out in November. I got to tell you honestly, tomorrow at the open, we may be selling to close 100 shares so that we can get rid of all of our short call contracts, turn our long puts into some type of a bull put or a bull put calendar spread, and maybe let this thing go unchecked without short calls for a period of time. If what's happening after market carries through to this type of a move when the market's open tomorrow. I personally think, now, our SOS member that was kind of bearish on Palantir, thinking it was going to be hard, and I think his logic was sound. I agreed with his logic. I thought it would be very hard for Palantir to be impressive enough to see a big move up after market. Again, we'll see what happens tomorrow and see if it actually carries through to a really bullish move. But even if Palantir was doing the opposite. Even if right now Palantir was moving down 4, 5, 6, 7% aftermarket, I'm still long-term bullish on Palantir. I love this company. I love what they do. I love the market space that they own. I don't know if there's anyone who does quite exactly the same thing they do. There are some other companies that are sort of in their arena. If you're ever on a page like this one, you scroll to the bottom, you see, they're comparing them to Microsoft, Google, Meta. I don't know that these are really necessarily competitors, because what Palantir does is very different than what Microsoft and Google and Meta are doing. So I think they kind of own a space that they're in semi-exclusively. Others are going to come along and do what they do and get involved in what they do, and it's going to be good for them to have some competition. But for right now, what they're doing is phenomenal, and it's no wonder they're topping $1 billion in revenue. It's a phenomenal company. I'm a long-term holder of Palantir. I can tell you that for sure. So we'll see what happens with them tomorrow morning, but I think that's exciting. We've got a lot more earnings on the slate for this week. If you were to just take a glance, starting tomorrow before the market opens, we've got AMD, Supermicro, Snap are all reporting tomorrow morning. Tomorrow after the market closes, we've got Uber, Shopify, Walt Disney, McDonald's. I mean, you've got some big companies reporting. We get to Wednesday morning. These are DraftKings is one that a lot of people will pay attention to. DoorDash, Lyft, Airbnb. There's a lot of companies. This is another really, really big week for earnings. There's Thursday before the market opens. You've got Eli Lilly, you've got ConocoPhillips, Peloton. Again, all big companies that people are going to pay attention to. Crocs is interesting to me. I used to trade Crocs a lot many, many years ago. Crocs is notorious for big moves, up or down, big moves on their earnings. That is a swing. I believe this was around their last earnings, $94 up to $122, topping $122 very briefly. Percentage-wise, that is a big move. Crocs, I expect is looking at possibly a big move. I may do something in the way of a long iron condor on Crocs. I used to trade them a lot. I have not had them in my portfolio and haven't done a lot with them, but I watch them every earnings report, and I think we could be in for something big with them as far as a big up or down movement. So I'm going to crunch the numbers on that. That was one of those things that I alluded to right at the beginning, that I haven't had a chance to crunch into numbers as much as I would like to. After the market closes on Thursday, Trade Desk. I've never traded Trade Desk, but one of our members who I've become very good friends with sent me something this morning on a text message, and Trade Desk has one of the larger anticipated percentage moves. And even though I've never traded this company before, their expected after earnings move is upwards of, I want to say 13, 14% or more. You're not going to see it on your screen, but I'm going to look it up real quickly because I want to be reminded of it real quick. Trade Desk is their anticipated move post earnings report is almost 13.5%. That's a big movement for an aftermarket move. I'm going to see what is anticipated with Crocs, and very possibly look at one of those two companies. We'll get options that expire at the end of next week rather than at the end of this week. I'm not gonna play around with something that reports on a Thursday morning or a Thursday afternoon, and then you only have 1 or 2 trading days to potentially get your profit. I'm willing to take that risk sometimes, but you got to be really careful doing that. That can be a type of thing that'll really bite you if you're not careful. Pinterest. I've made some really good money in the past trading a short-term long iron condor on Pinterest. So I'm going to look at that as well. So tomorrow, by the time the market's been open, maybe hour and a half at the very most, I'll have something out for the SOS members in terms of a spread trade. On tap this week, as far as economic reports that sometimes have the ability to sway markets or move markets, I don't know any one of these reports. International trade, PMI, ISM services, productivity and cost, wholesale inventories. These are all things that could possibly move markets if they are a massive, massive surprise to the upside or downside, good news or bad news. If it's really something that is so off of what people are expecting or so far removed from what our anticipation is, they could move the markets briefly. But I believe wholeheartedly that the most likely thing to move the markets for the rest of this week is going to be major earnings beats or misses on some of these bigger companies that people are paying closer attention to, or some type of major, like massive announcement on a trade deal, good or bad, or the geopolitical thing with Russia and Ukraine, with Israel and Palestine. Those can always have the ability to move things pretty big. So we'll keep an eye on those economic reports, but I don't expect any of them to be big market movers for the rest of this week. All right, tomorrow I will be online live 30 minutes after the market opens. Join us if you can for that. I'd love to have a big group live with us when we do that. In the meantime, I hope you had a good weekend, a good Monday. Have a great rest of your Monday evening, and we'll see you back here tomorrow morning. Thanks, everyone. Bye-bye.